India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming out of a holiday. The voting here in Mumbai and Maharashtra is done. 23rd, that is Saturday, we will get the results. Geopolitics, politics and geopolitics, both maybe a little bit on the on the easy, and I think that is exactly what we need as we start this new session. But otherwise, there is lots and lots of news flow, new news flow, which we need to address. I'm Prashant. With me, my colleagues Nigel and Surbhi. And Surbhi is back in the studios with us as well.
Yes, absolutely back from the extremely polluted Delhi air. And guys, I can tell you this, it's not just a headline or something in the newspapers or what we report here in the media. It's real. You cannot walk in the national capital of this country without, 2 layers of masks. And I think that's really, shameful. And hopefully, the state and the central government, everybody will get their act together and find a resolution. That's not how you want India's national capital to be known as.
Well, hopefully things, improve on that front. But Prashant, we went into that midweek holiday on fears of geopolitical tensions. I think that settled down a little bit at least for now. So that's good news.
No, absolutely. And I think it was pretty dramatic.
Yes.
Market was up cruising 250, 300 points.
Yeah.
And suddenly about 200 of those points were gone.
I saw the market at around, I think, 1 o'clock, just cursory on the phone, and it seemed fine. It was a 300-point move up and all. When someone mentioned in the evening saying, "Oh God, look at the sell-off," I said, "What sell-off?"
Well, that kind of a day. But let's just hope that today is a little better because the cues aren't all that bad. And you get the sense as you walk into today's market that maybe that rally on Tuesday, the last trading session, was kind of stolen from us because of the geopolitical stuff. So maybe that is something which is due. We'll see. But you got the action up on your screen, and of course, as you come out of holidays, you've got 2 days of market action to deal with. There is Tuesday's Wall Street and then last night's Wall Street as well. So cumulatively, this is what we've seen. S&P is up 0.4%. Nasdaq is up about 1%. The Russell 2000 is up about 0.75% as well. So it's positive, 2-day change. 10-year yield, can you believe it? Unchanged. -2 plus 2 basis points. And we left off at about 4.41%. Dollar index, and I think for the dollar, maybe the thing to watch is incremental moves. So is the dollar starting to move back up again? Last night it was up 0.4. Cumulatively, it is only up 0.3%. But the rate, the marginal change here in the dollar, I think, is what matters, especially here in emerging markets with what that does. Now, oil prices flattish, 0.3% lower, $73 a barrel is where Brent price is left off at. Post-market hours, you had the NVIDIA numbers which came through, and NVIDIA results met, but were not really a blowout. They were not really above expectations. Even their guidance, 37.1 was the expectation. 37.5 billion is the actual guidance. So they were not blowout. Post-market hours stock, the last I checked, and it could change, is down about 2.5% or so. And that's a large weighted name with great influence on that market. Bitcoin, and this is just last night now. Bitcoin last night hit a fresh intraday new high. There perhaps is going to be a crypto role in the White House. That's essentially what was the announcement from the Trump team. And I think we'll have to watch developments. Really, that will legitimize crypto as an asset class and how. So that's something to keep an eye. Now to geopolitics, just 2 pieces of news flow I want to put out. There were, U.S. market early on was sharply lower. And that was on news from Bloomberg, which said that Ukraine has fired a UK-made Storm Shadow missile into Russia. And indices were down 1.5% at one point. And then they recovered. There was another news flow. This is from Reuters. And that said that Vladimir Putin, the Russian president, is open on Ukraine's ceasefire deal with Trump. There are basically 2 ways to look at this entire Russia-Ukraine situation. 2 theories, really. One, of course, is, the fact that both sides are, in a way, escalating because they want to have the upper hand. When Trump finally takes charge on the 20th of November and he says, well, stop talking, it's essentially going to be facts on the ground. Who's got how much territory? and you want to be in an advantageous position at that point in time. That is, of course, one. The second more devious theory really is that, you basically are, you want the war to be in a situation where it's very difficult to Trump to pull back in a straightforward, clean kind of way. So we'll see. But from here all the way to the 20th of Jan till Trump is in the White House, I think you will hear these headlines. Hopefully nothing big happens and it's just sort of, skirmishes in that sense. Just to circle back and finish off the levels here. So the Nifty, it needs to, as I said, that rally fizzled out and there's a feeling that perhaps it's pending and we need to do it. So we need to sustain for that first above the 40-hourly exponential moving average. 23,727 is about 200 points. Those 200 points which went away in the last hour of trade on Tuesday. Support zone comes in at about 23,200 to 23,350. This is for the Nifty. The Nifty Bank saw selling pressure at the 40-hourly exponential. These are levels, the 40-hourly on both the Nifty and the Bank Nifty we put out on Tuesday as well. And we saw selling pressure exactly there. And we need to sustain above Tuesday's high for the Nifty Bank, which is 50,983. So we'll see if you're willing to go there. Support for the Nifty Bank comes in the recent lows, two-day low, which is 49,950. GIFT Nifty will give you a sense of how we are starting out. About 5-point change. It's absolutely flat. There is that news flow at the bottom of the screen with regards to the Adani Group, which I think is also it's a bit sobering. It's a large group, large conglomerate, and I think that doesn't help at the margin. We'll talk more about that as we go along. Surabhi.
Caution, and more caution from, all the cues that you've described and what we've seen over the last two trading sessions. And that's really playing out in Asia as well, because there's a fair amount of red on Asian screens this morning as they're taking a lot of this news flow on board. So look at the markets when most of them, Nikkei is down about 7/10. The Chinese market's lower, Hong Kong is lower. Singapore is absolutely flat for the time being. Taiwan's on the lower side as well. And what's kind of, exacerbating problems is the fact that the dollar took a bit of a pause while I was away. But I think over last night and going into today, you're again looking at those, inching back towards the 107 zone, 106.6 now, almost thereabouts. So that remains a big watch point as well. Anyway, talking about sort of some of the cues over here on NVIDIA, Wall Street futures are slightly lower again. As is the NVIDIA stock. It was down about 2 to 3% in, the after hours trading. So let's see what plays out today. And the issue is that how fast can you run? When you've been sprinting at a growth rate of not 100%, in some quarters, NVIDIA has grown 250, 260% top line growth. And when that pace slows down, how is the market going to digest it given the valuation sort of challenge? And that's exactly what happened, because NVIDIA's numbers for the quarter gone by, the revenue is still up 94%. But if you contrast that, like I said, with the run rate in the past 3 quarters, it is a lot lower, because this is the company that's been growing at 120%, 250, 260% in some of the previous quarters. Even the guidance that Prashant alluded to, the guidance is slightly a shade above Wall Street estimates. But if you just look at it in absolute sense, the company is now guiding for 70% growth in the 4th quarter. So the pace of growth is coming down, which is fine, which would be expected. But again, you have to match that with the valuations. They keep saying that Blackwell chips are selling really well. I think the market's going to make up its mind when it opens out for trade today. That's Wall Street. I want to put a couple of very important points on the table from the European Central Bank. And why is that? Because they came out with its financial stability report. It's flashing red across the board. So just so that we know these things in terms of the big central bank talk, number one, they're talking actually about an AI-related possible asset price bubble. So let's look at the first quote. Concentration among a few large firms, are referring to the Magnificent Seven in the US without naming them, saying concentration among a few large firms raises concerns over the possibility of an AI-related asset price bubble. That's, red flash number 1 from the ECB. Red flash number 2. They're saying that there is a greater likelihood that negative surprises, including sharply deteriorating economic growth prospects, sudden changes in monetary policy expectations, and further escalation in geopolitical conflicts, they could trigger abrupt shifts in investor behavior and sentiment, and this could spill over across asset classes. So the ECB is actually talking about market fragility because of these 3 factors that it described. And last but not the least, ECB is also quite worried about this whole trade tariff business, and they're taking that on board in the financial stability review, which the central bank does, saying rising global trade tensions and a possible further strengthening of protectionist tendencies across the world raise concerns about the potential impact on global growth. In short, the ECB is very worried about growth. It is worried about trade tariffs, and it's worried about possible bubbles in the AI-related space. So something that you need to keep in mind. Maybe the market's been pricing some of this in, which is why we've seen that post-Trump rally starting to cool off. For us over here, it's been consolidation, but the bias is very, very negative. I think protecting Monday's low is going to be extremely important for the Nifty, 350 thereabouts. Today, obviously, the 200 DMA is going to be in play. Can the bulls protect it, come back above that level or not? On the fund flow side, there's no respite. I mean, there's been a sell across most of the days, the 2 days that I was away, including, of course, the previous trading session, about 2,800 crores of FII selling, 3,400 crores of FII selling and 2,800 crores of DII buying coming in. And like Prashant mentioned, yes, we are going to watch out for the Adani developments. I mean, the charges are, and we are seeking a response from the group as well. The charges are of bribery, of possible fraud, and there is an indictment in the New York federal court. So this overall, I mean, just adds to the negative sentiment. Unfortunately, as I look at it, I mean, I'm not reporting anything positive, but Nigel, hey, how are you looking at things?
Well, for whatever it's worth, the exit poll suggested that the BJP will come back, will hold on to its gains in both the state elections and Maharashtra in particular. So if that holds out, then on Monday, in fact, we'll expect a positive reaction. That's point number one. The second factor is, we had that geopolitical issue that was playing out when we wound up trade. Well, it seems things have settled down a little bit with regard to Russia as well as Ukraine. In fact, the US market on that night itself, that's on Tuesday night, it managed to recover all those losses and ended in the green. So that's the other factor. The problem point is this, the dollar index. It went down to around 106 odd, but overnight it's back at around that 106.6. And that dollar index strength is a negative for emerging markets in India as well. However, today we have the Nifty weekly expiry, so things will pick up in the second half of trade. Well, there was a sense that you're getting a bit of a short covering bounce on Tuesday's trading session because the Nifty was higher, the Nifty Bank was higher, and the open interest on both of them were lower. And the FI data perfectly tallies with that because you did see that the shorts were down close to around 25,000 contracts or thereabouts, and there were some mild long positions. First signs after a while of some shorts getting covered out. So hopefully we can get some kind of good news which propels the Nifty to move higher because the shorts are still heavily stacked in the system, particularly from the FIs. The options data comes up for you on the screen, 23,800, 23,700. Both of them were fairly active in trade, which brings us to the level. Tuesday's high, that becomes an important reference point on the upside. So 23,781, you want to get past that to feel more and more confident. The hope the bulls will have, though, is let the upside be, for the time being. Hopefully, this 23,200 odd mark, which is the reference point on the downside, that can hold out. So that's the broad range you're looking at the options data, looking at the recent high as well. The Nifty Bank, well, it did very, very well in the last few trading sessions. In fact, in Tuesday's trading session, it showed signs it wants to go towards the 20 DMA. Now, currently, it's bang in the middle of the 20 as well as the 200 DMA. So for the time being, you'll want to defend the 200 DMA and then try to fight back towards that 20 DMA. So those are the important levels to look at. Well, two stocks I'm looking at. UPL, they have been indicating they're going to do something about their balance sheet. They're going to be doing some kind of deleveraging. There was a rights issue as well that's been announced. But they have also gone ahead and divested some stake in one of their subsidiaries. So that will help their cause with regard to, deleveraging. And the second stock I'm looking at is PSP Projects. We had broken this story. Vivek had broken this story on Tuesday. And now that deal is official. However, the price at which this deal has been done is a little bit lower than where the stock closed out at. So after the run that we saw in Tuesday's trading session, let's see what happens, given that the Adani Group is in focus today itself. So we'll keep an eye out on both these two.
Okay, absolutely. Important to keep those on the radar as well. Thanks for that, Nigel. So let's quickly get started with the equity call of the morning. This one is coming in from Surendra Goyal of Citi, who says, post 10% correction in the Nifty, valuations are more reasonable. With Nifty 1-year forward PE now just slightly above the 5-year long-term average. He says second quarter earnings were weak for consumer sector, but status quo in most others with decent double-digit growth in financials, industrials, healthcare and telcos. Looking ahead, he says potential second half recovery in public capex and rural demand are positives, while urban consumption and asset quality remains a watch point. He adds their September 2025 Nifty target is 25,000.
All right. Well, Sunil Paul of Goldman Sachs also weighs in. He says that Indian equities should be relatively insulated from the macro headwinds of a stronger dollar, shallower easing cycles, and likely higher U.S. tariffs in China, which are our base case expectations for 2025. Domestically, he says, while India's strong long-term structural growth story remains intact, growth has been cyclically slowing and impacting profits, which led them to downgrade their view on India equities to market weight about a month back. He says their economists expect India's GDP growth to decelerate to 6.3% year-on-year on continued fiscal drag and slower credit growth, which should continue to weigh on consensus EPS expectations.